Hey traders, we'll be getting started in just a moment. Please take a minute to read this disclaimer. All right. Good morning, traders, and welcome to this weekly technical outlook. Today is Monday, May 11th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the week with you guys this morning. Sorry about the delayed start. Hey, Fabi, Denise, Jose's in the house. Roland, I got you on both of those. Alex, great to see you all in the room. So we are still waiting further clarification on the negotiations going on between the U.S. and Iran. The U.S. proposal, or the Iranian response rather, doesn't seem to be up to snuff. President Trump putting out a Truth Social over the weekend saying that it's not acceptable. And so markets are still taking this in stride. We're a bit mixed here ahead of the open. The indices are trading slightly in the red here, but not by much, as we wait to see whether we'll get some more developments on that. For the dollar's part, we still responded to a critical support. We're sitting right above it. Euro's right below resistance. Gold made a breakout yesterday or last week, failed at the 618 of that rally. So we got a whole suite to cover. All the US dollar crosses, gold, oil, Bitcoin holding resistance. And then we'll take a quick look at the SPX, the NASDAQ, and the Dow. Any other questions or trade setups, as always, feel free to throw them on the message board. Here's our last update on the DXY, and here's what we look like now. This was on the 21st of last month. We were talking about that yearly open pivot near 98.24 with the real critical support zone just lower, 97.50, 97.65. You're talking about the 2025 low week close at 97.65, and the 97.50 is just the objective 618 retracement of the entire year-to-date range. And that was the low that we had registered earlier on that drop in April. So we treaded there again slightly last week, but it held, and we're now stuck in this tight range to open up the month right below the yearly open, right above confluence support, 97.50, 97.65. So we're looking for a resolution here. We're looking for a reaction. At the end of the day, if we buckle through the 52-week moving average, now currently near 98.50, you're talking about the potential for a larger rally. The first major resistance hurdle comes in at the 618 of the drop. You've got also the objective swing high from January. Both of those converge right around 99.50. So it's all the 50s, 97.50 support, 98.25, 98.24 resistance, but then you're looking at 98.50 resistance, key resistance, 99.50. Now, if we resolve a close below 97.50, that's really problematic. You're talking about 97 as sort of the major hurdle. That's the low close for 2025 and this year's low week, the low week close for 2025 and this year's low close. Both of those converge right there, just below 97. So we're able to make all of these assertions just from the weekly chart. Surely the daily chart must look decent, right? It looks okay. Here's what it looks like on our last update. We published this on the 8th of May, and the focus was, hey, we're dropping to the support. 97.88 was the December close low. There's been a really nice pivot over the last couple of months. That's the range low for the month. We're looking for a reaction there. There's 97.50, which is on the weekly chart as well. Here's what the daily chart looks like now. Here's a side-by-side comparison. Same exact zone. Not a darn thing has changed. So you still have 97.88 support. You have 98.23 resistance. That's the objective yearly open, not Mike Boutros' opinion, not FOREX.com's opinion, fact. And then you have that 200-day moving average. Been a pretty decent pivot in price for the DXY. That converges on the upper parallel, basically near 98.50. So again, 98.50 on the weekly chart. Well, that came up right here with that 52-week moving average. So you have the 52-week moving average, the 200-day moving average, both converging right there. So really nice levels, very clean, right? Here's what the 4-hour chart looks like, and here's what it looked like last week. So not much has changed. There's that 200-day moving average converging on downtrend resistance. There's initial resistance at the yearly open, 98.24. Initial support, we're sitting right at it, 97.88. We need to confirm daily close below that to mark resumption of the broader downtrend that we've been in off that high from March. And you're essentially looking for a reaction, a response, some sort of larger inflection on a drawdown towards 97.50. So the levels are really clear. We're trading just above larger, more significant lateral support at 97.50. Initial support is 97.88. Key event risk this week. You have CPI on tap tomorrow. You have PPI on tap Wednesday. So you get a nice little round figure outlook on the inflationary picture, both from the producer side and the consumer side. And then you get retail sales on Thursday. So a nice little steady drip, both on the inflation and the health of the consumer coming in this week, all amid headline event risk from the war, obviously, as the negotiations either break down or improve. The markets, again, are kind of sanguine. They're kind of taking it in stride. We got a resolution. We don't got a resolution. Things are starting to break down. That doesn't seem to shake the markets at all. Earnings have been pretty good. The employment figures were pretty good, right? It's really hard to kind of shake this market at this point, but we are still going to be very vulnerable to that event risk or headline risk, I should say, coming out from the Middle East. Any questions here on DXY? Really clean levels. We're in the downtrend still, but that downtrend sitting at lateral support, clear map targets on resistance. If we break below and we see resumptive move, 97.50 is going to be the real inflection zone that gives us the true test for the bulls. All right, euro dollar. Here's what euro looks like first on the weekly chart, and then I'll give you the multi-time frame look. So our last update on euro was published right here. This was written back on the 2nd, of the month, and we were talking about this critical resistance zone. Now this is where things get kind of sketchy. So 1775 into 1745, it was a 30 pip zone of resistance defined by last year's high week close, this year's objective yearly open, and last year's high close. So one is the high close and one is the high week close, the week that the high was registered, the close of that week. Both of those levels, really nice resistance. We closed just a hair above it last week. Is this a breakout? It's problematic for me. It's problematic for me. Euro opened with a gap lower. Am I right? I don't see that on my chart. Maybe a bit. No, I don't see it on my chart, Iman. But at the end of the day, going back to that weekly chart, what I wanted to show you is look at this on a closed basis and look at that slope. Guys, that slope is the 618 of the range. So we've been tracking this for months now. It caught the exact low back in March, and that's exactly where we closed on Friday, right there. So while it was above lateral resistance at 1775, the actual slope is right there. The close materialized at 1785. So if that was a true breakout, we'd want to see upside acceleration here. Not quite getting that yet. Not quite getting that yet. Momentum not really flagging like a runaway bull trade yet. So I'm still treating euro as like a non-conviction breakout. We need to see validation of a larger breach. And this is where the daily chart comes into play and why the multi-time frame strategy for me, has been so critical. This was published back on the 22nd of last month, guys. But the key resistance zone we had highlighted was 1813 into 1826 on the daily chart. That was the 1618 extension off the low and the 618 retracement off the high. Both of those levels converged on that 618 slope last month, capped the advance, we pulled lower. Key support we had highlighted was 1667 into 1681. You had the 200-day moving average in there, swing high from back there in March, and a basic 38.2 with the advance off the yearly low. All of it was right there. We dropped right into there. We dropped into there again to the close of last month, tapped it again. It is now the May opening range low, and here's the thrust. So for me to get upside conviction, for us to call this a confirmed breakout on the long side, it would be a break above this zone, 1826, 1813. Okay, that 13 pip zone is absolutely critical. So here's what it looks like on the 4-hour chart. We had it going within the confines of this nice ascending pitchfork formation. We were looking for a reaction there. It got kind of messy, so I scratched the pitchfork, but that same support zone that we were looking at held. One bounce, two bounce. Here's the third trajectory. We're now approaching this level yet again. 1813, 1826, that's key resistance. Okay, a topside breach there, and you're essentially looking for a resumption of the broader uptrend. 119.19 is the first level on the upside. Now, initial support, just a soft target, is going to be the yearly open, 1745. That's an objective level. That was the low that we registered yesterday in Asia trade. The monthly open comes just lower at 1730, 1731, if I'm not mistaken. Yeah, 1731. That's what these dots are. So that converges on slope basically until Wednesday. So I'd want to see that support hold if we're heading higher. But at the end of the day, bullish invalidation, the level that would need to be broken to suggest a more significant high has been registered, a larger correction is underway, is 1670, 1681, that same key zone. Okay, so watch the monthly open, 1731, key support, 1670, 1681, key resistance, 1826, 1813, breakout above that on a closed basis, you're looking for a resumption. Again, we're not getting much here on a tell by way of like momentum at this point, neither from the daily chart, which is flagging some bearish divergence actually, or the daily chart, which halted right at 60. So we're going to need to see something to give this thing a little bit of a kick. We don't have too much on tap out of the Eurozone this week. You do have some commentary by President Lagarde on Wednesday and Thursday, but it's pretty limited. So look for the dollar to really be driving price action, mostly here on the euro. All right, British pound. Here's what the sterling looks like. Is this a breakout? Again, similar scenario as euro, a little bit more of a conviction on the break on the initial thrust, but I'm still dubious about it. This was written back on the 30th of last month. And the focus was this 618 retracement at 136 proper. It's 136, 135.99. That's the 618 of the drop off the high. We had tested it for a few weeks. Even on the week that we wrote that report, when we tested a breach above, we actually closed back below again. Here's last week. We pushed through it again, and we closed northbound near 36.30. Does that keep us constructive? Well, that's where the near-term charts come into play. So the weekly chart, yeah, we're above 136 technically. We're constructive, same from the report, above 34.74. That's the yearly open. That's the 25% parallel. Really nice inflection along that slope. That's our bullish invalidation. So the question is, do we get resumption from here? Or do we get a little bit of a kickback first? Here's the last short-term outlook. This was written back on the 6th of this month. And we were talking about the initial approach as we were trying to break 136 right there. Here's what the daily chart looks like now. Okay, so that day, we didn't end up doing it. We closed back below. For the next 2 days, we tried to break through again. We finally closed above on Friday. That's the monthly open, by the way, at 36 proper, just to add a cherry on top of that 36 zone. So overnight trade opens up, you slip below, but here we are back above again. Listen, while above this zone, technically you're talking about a breakout, but you look at this in a near-term fashion. Here's the 4-hour chart, what it looked like last week, right? We were staying constructive above 35.12. We're now trying to stay constructive above 35.47. That's the Thursday low. That's where slope comes into play, basically tomorrow into Wednesday. But you're seeing a near-term consolidation here. So a series of lower highs, a series of higher lows might be coiling for a decent breakout. At the end of the day, topside levels don't change. 36.85 key. That's the high week close for the year. 37.45 key. That's the 2024 high day close and the objective 2022 swing high. So very well-defined levels on the upside. If sterling is heading higher on this stretch, 35.47 would need to hold support. You need to see a break above those highs from last week to mark resumption, 36.85, 37.45 on the upside. Now, that's the game plan as it stands from a technical standpoint. From a bullish invalidation level, the threat of a larger corrective move would be if we slip below 36.45, 34.65, 34.73. Again, the yearly open, the February low day close. Look at that pivot, right? Again, naked chart. Aside from any type of analysis, look at the pivot right there. So if we break below this level, the objective yearly open, now you're talking about the potential that a more significant high is in place and a larger trend reversal is underway. So if you're holding longs, we don't want to see anything below 35.47. If you're looking for new exposure, that's the break that marks the reversal, a breach above the highs from last week. Specifically, you don't have to break that actual high, but the break from last week would give you resumption toward 36.85, 37.45. As always, guys, not a trade recommendation from FOREX.com or StoneX, just my humble interpretation of the technicals here. But sterling really doing a tight dance, coiling right at resistance. Look for a breakout over the next couple of days. You do have some sterling data this week. We have the preliminary read on first quarter GDP, both on the quarter-on-quarter, on year-on-year. That comes out on Thursday. So keep that on tap. It's going to be after the release of all that inflation data out of the US. So it might be another catalyst for the sterling heading into the close of the week. Questions on the British pound? Okay, here is Aussie dollar. 72 is the name of the game, has been for the last few days. And that is a major technical confluence that we're trading above. The bulls are going to need to bank on that holding. Here's what Aussie dollar looked like back on the 5th of this month. We were talking about this approach into 72. Beautiful Fibonacci confluence, my favorite. 100% extension off the low from last year. 618 from the decline off the 2021 highs. Huge pivot zone. We ran into it back in April. We tested it again to the close of the month. We finally broke it and closed above it last week. Now, uptrend resistance ain't too far off. 72.95, just shy of 73 is the 2019 swing high. That's also where the upslope converges on lateral resistance. So we approached it last week, just a hair of upslope resistance and kind of exhausted. If this breakout is legit, 72 needs to hold pullbacks. Okay. Bullish invalidation is at the August 2022 swing high. That's 71.36. If we break below the median line, after coming off of uptrend resistance, basic pitchfork analysis would suggest your threat is for a test of the lower parallels. So that's why that is bullish invalidation. Initial key support, initial resistance, 72.95. Northbound of 72.95, you're talking about the potential of a major breakout. Like there's nothing for another 100 some odd pips. 74.26 is the 2022 high week reversal. Actually, it was just a high week close. It was an outside close. So big levels, right? So it suggests that we may be exhausting. The immediate upside might be vulnerable. You see momentum here for a second week closing right at 70. I would have loved to see this close northbound of 70 to continue favoring the immediate upside, but we're right there right now. What do you do? Well, here's what the daily chart looks like now. And here's what the daily chart looked like on our last update on Forex.com. This was published back on the 21st of last month. There's a trifecta report with the videos. And here's what the daily chart looked like. And here's what the daily chart looks like now. Okay, so we were looking for a reaction at that level. Took a few days, few weeks actually, into the open of this month before we finally broke out. We tested it as support on Wednesday and Thursday of last week, which kind of gave me some confidence to continue favoring the upside while above 72. There's major resistance. Not only do you have 72.95, which is that 2019 swing high, but you also have the 1618 extension of the advance off the low from November. So 1, 2, 3 gives you 73.08 into 72.95. Both of those converge on uptrend resistance over the next few days. That's your key level on the upside. If we see resumption here, again, momentum is flagging divergence. You've been seeing a series of higher high, higher high, higher high, higher high, no new highs registered in the oscillator. So it's not a reason to be bearish, but it is a reason to curb your expectation on the upside near term. Drill down even deeper. Here's the 4-hour chart, and here's the 4-hour chart looked like last week. So in the opening bell, I was talking to you guys last week, and as this thing had broken out, we tracked on a real quick 618 retracement of that weekly range. We said, look, as long as pullbacks hold 71.90, we'll stay constructive. On Thursday, we dropped down right into the objective monthly open. That's what these dots are, 72 proper. And then we rebounded. So it continues to shine a light, continues to put a spotlight on the need for a hold at 71.90 near term if Aussie's heading higher on this stretch. Next upside target, 73 proper. Now, if we slide below 71.90, it would suggest that there's a potential for a larger setback within this near-term formation. The first thing I would do is tack on a quick retracement off the low. We have no way of confirming that this is a registered high per se. But if we do that, I just want to show you the 38.2 retracement of that rally converges on those swing lows and uptrend support right here. Oh, right here near 71. So that's the risk if this slope breaks, if we break below the median line there. Okay, look for a coiled near-term breakout here in Aussie dollar. Very similar, a little bit better footing than sterling, but very similar. We're breaking major resistance, kind of coiled up here. Sterling is straddling resistance. Aussie's holding above it. Okay, but we need to see a near-term resolute break here to see that last stretch towards that next major lateral level on the upside for both of those setups. Questions on Aussie dollar? Okay, dollar CAD. Here's what Loonie looks like first on the weekly chart. So this thing made a pretty strong rally last week. Here's what the last weekly chart looked like. This was back on the 28th of last month. It's pretty dated now, but just to show you how the same levels have been holding. 36.17. That was our line in the sand. We wanted to see that hold support. It was a trifecta. You had a longer term upslope support. You had the pitchfork upslope support, and you had the low week close for the year, all at 36.17. We registered one weekly close below. Then last week, we just ripped back up and went right back into this formation. Does that put us back into this formation? Or is that just a stronger rebound? The level is well defined, and that is 37.24 into 37.33. That is key resistance. That same hurdle we've been talking about since the start of the year. Why? Well, it's the yearly open. It's last year's low week reversal close. And it's a basic fib, as you'll see on the daily chart, off the high. All of it converge right here. So if a more important low is in place, that's the hurdle we need to validate that move. Does that make sense? Drill down to the daily chart. Here's what Aussie looks like here. And here's our last, dollar CAD looks like here. And our last dollar CAD update was on the 5th of this month. We were talking about this rebound off the February close low, 35.50. We're like, all right, if this rebound is legit and a more significant low is in place, you had some divergence there. Let's see a break above 36.50 to validate that. Well, we got that on Friday. We closed at 36.74. So technically, that is a near-term breakout. Okay, but the major resistance zone on the upside is still 37.25 into 37.33. That's still a key hurdle. It's even the August low, the September low, the February highs. It's all right there. So it's a breach above this zone that would suggest there's a major trend reversal underway and open up the door towards a test of 38. Till we get that, the test is, does 36.50 hold support? Here's what it looks like on the intraday chart. 618, just a decline from last week's high, is that 36.50 as well. It was on downtrend resistance. Remember, this is the same pitchfork we've been tracking since early April, guys. And this slope you see here is the 786 extension of that pitchfork. So we're still working with the same gradient. The 786 caught the lows. There's confluent resistance looking for a prominent break. We got it, tested it as support, and moved off. So that's near-term support at 36.50. Key resistance is 37.33, 37.25. That's the breakout you need to suggest, again, a more important low is in place. If we break below 36.50, the resumptive move would be a close below the monthly open. You can see we defended the monthly open there on Tuesday. That level comes in at 35.82. Losses below 35.82, I don't need to wait for 35.50. That would threaten resumption of the downtrend, okay? And then you're talking about 35.50 again and potentially 34.85. That's the September 2024 low day close and the swing lows from January. So really do or die here. If the bulls are going to make a progress on this stance, 36.50 support, watch for a reaction near 37.33, 37.25. CAD is limited on data this week. Okay, you got some pretty weak employment data out of Canada on Friday. That was accompanied with a pretty strong report on the NFP. So you got a double whammy kind of push there. But at the end of the day, we're trading just shy of major resistance on dollar CAD. Questions on Loonie? All right. Japanese yen. Here's what the abomination looks like. So ever since that secondary push, it's been kind of hard to get a grasp on things here. But here's dollar yen. This was as we were returning from resistance. We've been talking about 54.78, 55.40. That's absolutely critical. That's confluent uptrend support, guys. You're talking about the 2026 low week reverse. It wasn't a reversal. Low week close that we registered back in January. So the week that the low was registered, the close of that session, boom, 54.79. The 618 of this year to date rally, the January low to the high we just made, that gives you 55.40. We had flagged that as soon as we made the turn as key support, and we nailed it right there, right there. You also have basic upslope support off last year's low, 1 touch, 2 touch, 3 touch confirms right there. So no surprise that we're getting this strong reaction of it. Now, the problem is you have the Japanese officials kind of waiting with their scope on it with a hair trigger. Do you want to get long and fight that administration or fight their policy of trying to sort of curb that yen weakness? I'm not really trying to get involved in that. At the same time, I can't really jump on board if I'm like, yeah, well, they're going to push lower. They're going to push lower because we haven't broken uptrend support yet. So I'm not trying to dissuade you guys. I'm just trying to tell you from the weekly chart, if we were to remove the obstacle of intervention, you're trading just above uptrend support. But because we have that sort of X factor in there, not a trade I'm ever really interested in. Drill down to the daily chart, give you guys an update this right into the close of last month as we were testing that major key resistance. Again, 160.21 into 160.73. That's this zone right here. We had broken out of a near-term consolidation. That was the first hurdle. We were looking for a reaction there. And boy, oh boy, did we get it. Here's dollar CAD, or here's dollar yen rather, on the daily chart. The next day, the very next day, we reversed, massive outside day reversal right through key support, closed right below the yearly open. We went back and tested key support as resistance. Many say this was a secondary intervention step in. Maybe it was, maybe it wasn't. There it was, right back into support. That was the drive into key support. And here we are again. So not appetizing for me as a trade setup. Here's the 4-hour chart. And, you know, the 4-hour chart here is just completely mucked up at this point. That pitchfork is gone. That was this pitchfork that broke. But at the end of the day, here's where we are into the start of the week. The monthly open converges on the yearly open at 156.66 into 156.62. Okay, so that's support. We tested it right into the weekly open. Resistance 57.42 into 57.70. That was former key support. That's still got to hold resistance if we're heading lower. Okay, so near term, that's sort of the ceiling you're looking for. At the end of the day, 54.70 break would validate a much larger decline here. 54.70 is the 618 extension from the high. 54.78 is going to be that, what was that? That was the low week close for the year. And then the 618 is 55.40. This whole zone is critical support for dollar yen. So it's really testing the resolve of the BOJ and the Japanese officials that are looking at this as we're testing this key support. If the bulls are going to attempt another step in, or they're going to really tempt the resolve, it's going to be a 57.70 break that pushes this up. But at the end of the day, anything below 54.70, sayonara. You're looking for a much steeper decline in dollar yen. decision time. This is your key zone of influence over the next few days. Capiche? Okay. Swissy. Here's what dollar Swiss looks like. So we're treading into some major critical support here. The zone of interest that we've been talking about for the last couple of weeks has been 77.72 into 77.69. Okay, you're talking about the 2011 low week close, many years. You're talking about the 618 retracement of the year-to-date range for 2026 objective, right? Not Mike Boutros' opinion, not FOREX.com's opinion. Fact. You had a major pivot in price here all throughout February into the March breakout. Just lower, you have the low week close. So we're looking for a reaction here, right? Here was our last update on Swissy. This was highlighted back on the 4th of this month. As we were testing that upslope, we said, even if that upslope breaks, there's 77.72, there's 77.69. That's the key support. So look, technically we closed below it. The close was 77.64. So is that a break, Roland? I would have wanted to see some more follow through. You know, it looks like this 3-point support has broken, but again, I'd want to see some follow through here. Momentum is not really giving us that either. We're still above 40. That's not good. So look, if you're holding short exposure, this is one of those trades where you want to clean up a little bit, maybe reduce position size, definitely lower protective stops, get a little bit more break even, a good candidate for potential trailing stop. But you're at a major inflection zone any way about it, any way you slice it. Again, naked chart, all analysis aside, that's a key inflection zone, right? Even if I just put my crosshair there. So we're looking for a reaction here. Drill down deeper. Last short-term update. And again, anyone who's new to the room, on all my reports, you'll have the forecast, which will be the weekly charts, and then the short-term outlook, which will have your daily and 4-hour charts as per the multi-time frame approach. Here was dollar Swiss turning from beautiful resistance. Here's the breakdown. There's 77.72, 618 retracement, just below last month's range low. So we got that break, but man, we got stuck right there at that 618. Here's the side-by-side comparison. That 618 is null and void, obviously, because that low is out, right? But there's the April low day close, break. Here's the resumption. What is that now? Now, look, the slope is now offering some resistance here today. I don't know if that's a hold, but at the end of the day, you need to see a push below last week's low to mark resumption. You're looking for 77.30. You're looking for 69, basically 77. 69.98 is the 786 retracement. Now, resistance is at the April low day close, which converges on the monthly open. So the monthly open is these dots right here. You're talking about 78.13 to 78.16. That converges on that 75% parallel right there over the next few days. That's near-term resistance. Bearish invalidation is 78.75. That's a 38.2 retracement. That's the October, November lows, the December close low. All of those converge right on basic downslope resistance. That's your bearish inval. Okay, resistance, bearish invalidation. Support, we're trading right above it right now. Push below that Friday low gives you 77.30 and 76.99 basically. So really well-defined levels. I don't like where the momentum is at. I don't like that there's not much thrust behind this. And I don't like that the DXY is basically, you know, where it is right now. Like if you get that support break, great. I think dollar Swiss collapses, but here we are treading support again, you know, again. So the onus is on the bears for the dollar bears to really get this thing going, trading at this major pivot zone. For dollar Swiss, it's going to be a break below the median line, really. Again, Friday's low comes in near 77.61. That's going to be the break that kind of opens up the next downside floor target. Other than that, you're basically sitting at support into the open of US trade. Make sense? All right, I'm making good time today. All right, gold. So here's what the gold trade looks like at the moment. Alex says, good morning, MB. Please take a look at silver. Thanks. I haven't looked at silver in the longest time. Alex, we have time. We'll take a look in a moment, okay? Here's what gold looks like. I put out a piece over the weekend, guys, with the gold weekly outlook. Here's what it looked like. This was published on Saturday, I believe. The focus is, there's really nothing to update, but the focus is this critical support pivot. Listen, the low week close for the year was 44.93, 44.92.50. The 618 of the rally off that October low is 54.40. The 2025 high close registered late in the year was right there also at 45.30. So this whole zone is critical. And guys, I do this for you on every single report. I take great lengths to do this. On every single report, in the first paragraph, you'll have the link to the previous update so you can see how we've been faring, right? Everyone's got opinions on the market. It's always good to see, well, how is this, how has this particular setup been working? And I believe in 100% transparency. This was published back at the end of last month. We were testing resistance. We said, look, that's your key support pivot right there. 54.40, 44.93. Fast forward to this last update, we dropped right into support. Here's the rebound into initial slope resistance. So in this report, I highlighted my major focus into May trade at this point is on a breakout of last week's range. It defines the monthly opening range. It's right over support. It's right below resistance. So a break of this candle's range should be telling. At the end of the day, we need to clear 48.94 to mark the next upside target of 50.25. That's key resistance. 48.94 is the objective record high week close. So the week that the record high was registered, the close of that session has been a beautiful pivot in price. That's 48.94. So the levels are well defined on the weekly chart, and it suggests we're trading right below upslope resistance, right above lateral support. Here's the live chart right now. We're looking for a breakout of this candle. Okay, now the last short-term update was published back on the 17th of last month. This is a bit dated, but we were highlighting the rally into key resistance. We said, whoa, stop traffic, 48.55 into 49.10 on the daily chart is huge. My favorite fib confluences, 618 off the high, 100 off the low, key resistance, stop traffic. The weekly chart had 48.94. That was the high week close for the record. So either way, daily components, weekly components, we were looking for a reaction there. Here's what gold did. That was a perfect tag and reversal. So fast forward a few weeks, that was the actual high registered that day. We turned lower and we dropped right into key support. So there it is. There's the drop on some bearish divergence or some bullish divergence, right? Price action with a lower low. The oscillator did not confirm the low. Both of those reference points pretty darn close to 50. Nice reversal. Here's the pop-up. So we can't say a low is in yet, but drill down to the 4-hour chart. We can say we have broken near-term downtrend. And this was the update. We didn't even have that pitchfork back then. This is as we were heading into resistance. This was up here. So there's that downtrend breaking on Wednesday of last week. We failed for the 618 retracement. We were covering this at length in the opening bell every day on Wednesday and Thursday and Friday. Here was the hold. Here's the kickback. As we said on Friday in the opening bell, guys, if gold is heading higher on this stretch, monthly open support would need to hold. That's 46.21. Okay. Resistance 47.42. Topside break above that level and a close opens up key resistance at 48.55, 49.10. Nothing changes. For the bears to reassert control, they would need to see a plunge below 44.92, period. Below the monthly open, we're neutral. So this is near-term bullish inval. We're constructive all above 46.21. If we break below that, we're not necessarily bearish. We're just no longer bullish. To get bearish, you would need to break 44.92. Topside breach above 47.42 brings resumption. Key resistance 48.55, 49.10. Look for a larger reaction there if reached. Make sense? Got some good inflation data on tap this week. Typically a good reactor for gold. So let's keep an eye on that as we head into tomorrow and those PPI figures later in the week. Roland says, cool, thanks on the dollar, yen, and dollar Swiss analysis. You got it, Roland. Always good to see you in the room, sir. So that is Swissy. And yen and gold, last three. Alex, you want to look at silver? I haven't taken a look at silver in a couple of weeks, so let's do that real quick. Here's the weekly chart. So obviously last time I looked at this was like what, March? Okay. Wow, look at that drop into, wow, beautiful support. That's the 786 of the October rally and the exact 618 extension from that high. Perfect touch. This retracement needs to get retraced. Okay, bear with me one sec here, Alex. Let me just see first what this looks like. And then let me see what this looks like. We're testing that breakout right now. Okay. 38.2 is breaking out right now too. All right. Okay. Looks like here it's even more an apparent of a breakout. Look, you're breaching the April range highs on this move. You're breaking the 2025 range highs on this move. And it looks like it's approaching, at least from this first rendition, right? I'm going on the fly here for you, Alex. This is uptrend resistance right here. So I'd be looking for a reaction here. Again, remember, slope is always subjective. Lateral levels are objective. That's not up for me or you. Depends on where you are. We're always going to get the same lateral levels. So one thing I would want to check is just what that high day reversal close looks like. Yeah, 89.26. That would be my first sort of breakout target if you see resumption on this move. Okay, that's the March high day reversal close. It was checked as resistance the following days after that breakdown. That converges on upslope resistance basically into tomorrow and Wednesday. And that would be your first upside level. If we're heading higher on this stretch, look, near-term bullish invalidation I would have right at the monthly open. That's 73.70. That's a pretty cool level too. What is that, 78.70? See if that slope holds. See if that slope holds and look for a reaction here today. All right, Alex, that's all I'll say on this one, just to keep time moving along. You're breaking into overbought condition. If you crack that slope, 89.26 on the upside, you have 92.93 is the 100 off the low. Initial support, I don't want to be like too arbitrary here, but actually the weekly open, I'd want to see hold support on a move like this. That's like 80.78. But bullish invalidation has to be at the monthly open. That's going to clear the downside of this upslope. That would put you back on a sort of resumptive move. But looks like a pretty constructive move. That first breakout initially testing slope resistance right now. Does that help? Quick look there for you on that, Alex. All right. So that is gold and silver. Here is oil. So is it even worth doing analysis on oil these days? Well, this is what the charts look like. Look, I was kind of been playing around with this over the last couple of hours this morning. Here's the daily chart. The focus region I've been talking to the guys in the opening bell about in Forex VIP for the last 4 days has been right here. Key support is 90.79 to 91.78. That's a 2023 high day close and 2023 high week close. You can see that we dropped into there last week. We tried to push through it again on Thursday. We couldn't do it. This slope has actually been pretty darn clean. We've been tracking this one, guys, since mid-April, say April 20th. It's probably when we added this one. Caught the high exactly. Break below the median line. Here's the 25% parallel. Support, messy break there. Here's the median line. So it puts the initial focus on what's the level we've been talking about for weeks. 100 and 101 into 101.50, the same godforsaken region. It's been a very nice pivot in price, to be fair. But remember, we said below 101, 101.50, you know, we're working with the assumption that a more significant high is in place. Above 101, 101.50, you could see panic. And so every time we've broken above this, it's been kind of like crazy rally mode, crazy breakdown mode. That now converges on the median line. So that's my hurdle. Obviously, this is 100% reliant on what the news flow comes out from the negotiations between the US and Iran. So we'll have to stay tuned for that. But support at 90.79, 91.78. I still like that level. If we break below this level and close below it, you do have the potential for a larger setback here in oil prices. Till you do, this is kind of your key range break over the next few days. We'll keep you updated on MB Forex on any headlines that come with regards to that. Bitcoin. So resistance probed last week. We tried to close above it, failed, and then we pushed through. And on Sunday, yesterday, we actually did close above it. That level was 81.03. Remember, that's 100 off the low. So if this was just corrective and there was a larger setback still to go, that would have needed to hold. This kind of starts to interrupt and starts to fuel the bulls a little bit more gasoline. Okay. Look, the next major hurdle isn't too far away. 83,712 into 85,273. That's the 38.2 retracement from the decline off the highs he made in October, the record high. And that's the 2025 low week close. So we registered that right here. So that's your next hurdle on the upside. It's not too far from where we are right now, but technically, while above 81,000, it would be constructive. Now you're seeing some bearish divergence on the daily chart, price action with a higher high, the oscillator not confirming a new high or a new extreme in price. So there is that. You're not seeing that acceleration on a break of uptrend resistance that you would want to see. That's kind of alarming. So I don't really know how to treat this right here. The major level on the breakout that we got above 74,000 was 81. So we're still kind of straddling that level right now. If we see resumption above here, and again, guys, just as a larger note, I'm still a secular bull in Bitcoin. We're still in a multi-year, we're still, nothing interrupted that. There's been no fundamental backdrop change. But the question is the crypto winter over? Is that larger correction off the high done? The level that would really validate that and quiet that whole notion is 87,500, basically. It's the objective yearly open, converges on downtrend resistance. This is the weekly chart. This is the daily chart. So treat this as you may, right? It seems that a more significant low was in place. The break above 74,000, 76,000, this zone right here validated that for us in validating the January downtrend. But now you're starting to run to a point where momentum's looking a little tired and you're not getting the reaction you would want at a major break of uptrend resistance. So I'm a little bit cautious here. Near-term support, 74,434 into 75,159. Same zone was resistance, is now support. Bullish invalidation, the level that would invalidate this whole notion of the breakout is 70,283 into 70,531, this level. So initial support, bullish invalidation, looking for a hold above 81,000 on a closed basis, topside levels 83,712 into 85,273. And obviously the objective yearly open at 87,500 is going to be absolutely critical. So those are your Bitcoin levels here early in the week. Questions on that? All right, really quick levels on the weekly charts for the equity markets. Here's the S&P 500. So the level I had highlighted in the last S&P 500 report, guys, which was highlighted for you a few weeks back at this point. This was published. Oh, nothing changes on the Bitcoin levels either. This was highlighted back on right into the start of the month. So we are trading right here, right? So no change to any of those levels that we have highlighted into the close of last month. And here was the last S&P 500. This was published back on the 18th, so it's a bit dated, but the levels are unchanged. The major hurdle was 71.28. We sat there for 1 week. The following week, right after I wrote this, we continued to rip higher. Guys, we're now poised for, we already marked 6 consecutive up weeks, and we're now trading into uptrend resistance. We actually closed above this slope on Friday. This is a pitchfork we've been tracking since 2022 low. Really nice support. Again, probe through, mean action, but support, resistance to the 75% parallel, pivot on the 75, test of the median line, break. Here's uptrend resistance. The next lateral move is the 1618 of the 2026 opening range breakout. That breakout that we saw there in April was a breach of the yearly opening ranges. We talk about weekly opening ranges. We talk about monthly opening ranges. Here's an example of a yearly opening range. The opening range strategy has been actually, or technique has been pretty suitable for S&P 500. Here's last year's opening range. Remember, on the weekly charts, each one of these lines are the yearly open. So here's the yearly open. You set a high, you test the high. You set a low in Q1, you break the high in June, you close near the highs. Here's this year's open. You set a high, you test the high, you set a low in Q1, you break the highs in April, you're looking for a late year high. Doesn't need to happen in December or, like it did here, but you're looking for a Q4 high, basically, late Q3, Q4 high. So this is your first hurdle. The first level is 74.48. Beyond that, a longer dated 1618 extension from the advance off of last year's low, 1, 2, 3, gives you 76.77. Initial weekly support is back at 71.28. Bullish invalidation is all the way down back at 69.80 into 69.21. That same level that was resistance for the first quarter of the year, that now converges on the 75% parallel. So levels are pretty clean. Momentum is on the cusp of breaking into overbought. Look, if we break into overbought, you're likely to see 76 real quick. A break into overbought condition on a weekly chart is not easy, but when it does happen, you get, again, that's when the market has the most thrust. Forget this notion of we're in overbought, we need to sell. That's hogwash. That's when the market has the most thrust behind it. So if that is accompanied with a breach of uptrend resistance, yeah, baby, this thing could go real quick. But right now, we're right there. Here's the daily chart. I don't usually go too deep into detail on the equity charts, guys, but I just wanted to show you because this actually looks, pretty clean. Even this pitchfork that I showed you a couple weeks back, uptrend resistance break, check of it as support, resumption. Here's that 618 extension. Drill down even deeper. Here's a real near-term pitchfork I showed you guys a few weeks back. Still in play off of the objective low, high, low, right? As objective as you can get. Here's that 75% parallel, right on 74.48. Make sense? NASDAQ pushing higher as well. That thing's broken through all of our major upside objective levels from here. I actually just wanted to show you this just to give you this so you can smile at it and laugh. You're in overbought condition. I don't have any upside shot beyond here. I need to rework the levels on the NASDAQ, guys, but that's a breakout. That's a breakout. Even that really acute channel I told you I really don't like, that's still holding. We'll adjust it a little bit here on the 4 hour. But it's been an upside ripper. It's an overbought condition on the 4 hour. It's an overbought condition on the daily. It's an overbought condition on the weekly. The one that has the most thrust. Now, the indice that has the most catch up would be the Dow. The Dow last week struggled, and I don't know what to do with this. The level I've been telling you guys for the last 4 weeks has been 49,500. What is that? That's the objective high week close. The week that the record high was registered, the close of that session, and uptrend resistance. The last 3 weeks, we sat right there below it. Last week, we closed right above it, but still below uptrend resistance. You see that slope? So what is that? NASDAQ is at record highs, ripping, probably the one that has the most fuel. S&P 500 is at record highs, already broken the yearly high. This thing hasn't even cleared the January highs. So the laggard? You need to beat 50,271 to mark resumption. You're looking for 52,000. You're looking for 52,951. Support, January low comes in at 47,853, excuse me. Bullish invalidation, key support, 52-week moving average, the low week close for the year, both of those converge at 46,400 or so. So the levels are well mapped out. Momentum is flatlining below 60. Let's get moving here on the Dow. Okay. Zaynep, I don't answer questions like that. Which stocks would you recommend buying on the U.S. stock market right now? I can't give you explicit trade recommendations, but if there's anything you're specifically looking at, I'm more than happy to break down the technical levels for you. Roland says, thanks again, Michael, for another insightful webinar. Have a great week ahead and God bless. Hey, same to you, Roland. Appreciate it. Yeah, we'll go ahead and wrap it up here, guys. Keep it light. Remember, we have CPI data on tap tomorrow on Tuesday. That's going to be the first major event risk for the week. PPI on Wednesday, retail sales on Thursday, preliminary GDP out of the UK on Thursday as well. And then on the backdrop of all of this, we have the headlines coming out with regards to the negotiations with Iran. That's really going to be kind of the main crux of the sentiment for the week. So we'll try to keep you updated as always at MB Forex. Quick reminder, if you're watching on YouTube, guys, go ahead and hit like and give us a quick subscribe to get a quick alert whenever we do these live webinars. Thank you all for keeping this FOREX.com's most widely attended webinar year in, year out for year 3.5 now, almost 4 years. Stay light again early in the week, in the monthly opening range as we get things nice and steady here. Watch the headlines and I'll keep you updated. Till then, best of luck trading. Have an awesome week trading, and I'll see you next week, same time, same channel. God bless, guys.